Morning, everybody. Today is Thursday, December 12th. It's currently 10:26 a.m. and we're looking at Nas again. Just want to give you guys a little overview of what we have. Um, so on the 4-hour time frame, we're bearish. As you can see, this is a move down followed by a move up, and then this big ass candle came and closed beneath this level right here, this low. Granted, we did have some news today, PPI at 8:30, which is what caused that. So I have a pretty much a bearish outlook, but I want to show you guys something. This is why the markets can sometimes change trend. So look, this remember liquidity sweeps move the market. So this low right here, this move down and this move up, this is 30-minute liquidity. 30-minute liquidity, right? And with that being said, the market came all the way down here, swept this level, and started immediately displacing on the 5-minute time frame. And remember, like I said, a displacement is pretty much a candle that leaves a fair value gap. So it broke, look, a move up right here. This is a high. These two candles created a high. This candle came right here, broke above it, left a 5-minute fair value gap. If you can hear that in the background, that's my dog. Um, so pretty much what I'm waiting for right now, I'll take a short-term trade. I don't expect price to go all the way up, up here because we're still bearish on the 4-hour time frame. However, at this very moment, we are bullish. So if I can get a bullish confluence, meaning we return into this fair value gap, I don't know why it says 30-minute. Hold on, my bad. Not 30-minute. This is a 5-minute. We return into this 5-minute fair value gap and start displacing to the upside on the 1-minute time frame. I'll take a buy and I'll take some profits off when we get to levels like here, here and stuff like that. But there's no guarantee that it can happen because we are ultimately still bearish on the higher time frame. So what can end up happening is we can sweep these highs and displace downward again. But we're gonna wait and see. I don't control the markets. I can only react to what it gives me at the very moment. And right now we're looking pretty bullish. And granted too, on the daily we are bullish. And this is a huge 4-hour fair value gap as well that we just tapped into. So I don't know, guys. We just have to wait and see, and hopefully the market does. Oh, we even created another 5-minute fair value gap right here. So I'm gonna go put that right there. 5-minute fair value gap. Boom, boom. All right. So if any of these fair value gaps get respected, I'll go and I'll take some buys. But yeah, that's what we're waiting on. Also, a little bit of my strategy overview. I'll give you guys some knowledge real quick. So let's say this is hold on, boom. All right. And then boom, boom. Oh, that's horrible. I'm so bad at this. Okay. So, no, blue. Sorry. Hold on, guys. I'm trying to show you guys what a breaker structure would be. Blue. Let's do this. Red. Okay. So look. Let's make this a little bit longer. Guys, always remember, a blue candle or an up move and a red candle or a down move is considered a high. Now, what you do to determine the high of these two candles is you look at the wick. So if we're going up, if we're looking for a high to be broken, we need another candlestick to close above this wick. You take the longest of the two wicks, and whichever candle closes, for example, let's look like this. Look. This is a break of structure. This is a break of structure. Why? We had a move up followed by a move down, and then we had another candle breaking above the longest wick of the high. You get it? And then vice versa for a sell. But let me just check on this trade really quickly. Hold on. Did we tap into the 5-minute fair value gap? Not yet. Okay. So yeah, this is a bullish break of structure. Let's look at the bearish now. Let's say, let's flip it. Take this. Take this. Take this. Delete this. Okay. Make this red. Okay. Boom. 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 Okay, look. Now vice versa for a sell. If we have a red candle, aka a down move, followed by a blue candle, aka an up move, to determine the lows of the two candles, you take the longest wick. So this wick is longer than this wick. Now, if a candle breaks beneath this wick, we are now bearish. We are now bearish because this is considered a break of structure. This candle came down, we have a wick here. This candle came up, we have a wick here. The wick on the bearish candle is longer than the bullish candle, and the next candle came and it broke beneath the longest wick. That's a break of structure. So if we have on the 4-hour time frame now, let's look at the charts. My candles are just white and blue, blue representing the buyers, white representing the sellers. But ultimately, look, guys, think this is a red candle, even though it's white. We have a wick here. We have an up move. So this is a low. These two candles created a low. This candle didn't break below the low. This candle wicked it, but did not fully close. This could have been a potential liquidity sweep. But the next candle is what we need to look at, because the next candle came and literally broke structure. This candle closed all the way down here, and we only needed it to close a little bit beneath these lows. So this represents momentum, right? As you can see, this is a confirmed break of structure. Hope you guys understand that. So that's pretty much how you determine if you're in an uptrend or a downtrend. This shit did not close. Anyways, so now that's just the basics. I'll do a full video in depth on it, but I just wanted to give you guys some knowledge while we wait for a trade to cook up. So yeah, that's a break of structure. Now you can use this on you need to use this, matter of fact, on every single time frame, especially the higher time frames, to determine the daily bias, to determine what price wants to do in this specific day, right? So let's take a look at this, right? If these were 4-hour candles, and then this 4-hour candle came and broke beneath these lows, we're bearish on the first 4 hours of the day, ultimately. You know, now granted, anything can happen on the smaller time frames within this 4-hour candle, but ultimately we want to take sells. Like today, I really want to take sells, but we got a 30-minute liquidity sweep right here, and price is just rallying off of that, you know? So I'm reacting off of what the markets give me, you know? So now, if you guys didn't understand, or if you guys do understand, I want to show you guys something else too. I'm gonna show you guys what a liquidity sweep would be. So this candle, right? We determine that this is the low. Let's say we're looking to buy. Let's say we're looking to go up, and we're looking for that slingshot move in an upwards direction. We need liquidity in order to go up, right? So check this out. Let's say the market does this. This red candle wicks all the way down here, but closes up here, right? This is a liquidity sweep. A liquidity sweep, if you guys didn't know, at lows and highs, there's money. There's buy orders, there's sell orders, sell limits, sell stops, buy limits, everything. What the market wants to do is the market wants to liquidate those positions, meaning that it wants to tap into them, trigger them, kick people out of the market, and put people into the market in order to make a big move to the upside. This is a liquidity sweep. It swept the lows, and bonus points if we break structure after this. Bonus points if we break structure to the upside after this. So say like, okay, this is a low, this candle swept the low, but then next candle, remember this is a high, right? A blue candle followed by a red candle, a move up followed by a move down. Let's say this happens. Let's say this happens, right? This blue candle closed above these highs after a liquidity sweep. Bonus points. Boom. Boom, 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 boom. You have yourself an edge in the markets. This is very, very, very crucial because, guys, liquidity sweeps move the markets. And I'm going to show you guys a real example of this right now. Remember I said a liquidity sweep of these lows, right? And then a break of structure. Look what happened here. On the 30-minute time frame, we look 30-minute, this is the 30-minute candle, a move down followed by a move up. We came all the way down here. We didn't close down here. This blue candle did not close down here. It closed above. It swept these 30-minute lows, and look, it broke 30-minute structure here. This candle swept 30-minute lows and broke above these 30-minute highs, leaving breaks of structures, fair value gaps, everything. There is momentum to the upside, guys. There is momentum to the upside. So this is how you're able to just not marry a bias, because as you guys know, I was bearish for today, but we can ultimately turn bullish now and return up here because of liquidity, bro. Because of liquidity. And I want you guys to always remember this. Liquidity sweeps move the markets. The higher the time frame liquidity sweep, the stronger the move is going to be. The stronger the move is going to be. You guys need to remember that. Liquidity sweeps, it's money. It's money, it's money. Money moves the markets. Capital moves the markets. You need a liquidity sweep first before anything. And listen, it doesn't even have to be a liquidity sweep, but price just needs to come and tap into some sort of liquidity, whether it be a fair value gap, whether it be an order block, whether it be whatever you consider a confluence. It has to tap into something before we get a move up. Because time and time again, what happens is, let's say the market opens up, it doesn't sweep any liquidity, nor does it tap into any liquidity reservoir, right? Like an order block or fair value gap. It just goes straight into one direction. Now you're thinking, oh, let me enter because the market is going up right now without tapping into anything. No, that's it chasing liquidity to then go in the right direction. How many times have you guys opened up the markets? I mean, the markets opened up, you guys take a trade because it's going rapidly in a small time frame, with a 5-minute time frame, just blue candle after blue candle, right? And then it taps a level and it reverses. That's because the market is chasing after liquidity before it makes the move that it intentionally wants to make. You understand? That's literally it. And I'm gonna make a video for you guys determining my strategy. Showing you guys my strategy, but I just wanted you guys to really understand how and why liquidity is so freaking important. It's so important. You need liquidity in everything. Like right here, look, these are 5-minute lows. This is 5-minute liquidity, right? Now this white candle, aka this red candle, can come, sweep these lows, tap into the 5-minute fair value gap, and then we enter on the 1-minute time frame after a break of structure. Why? Because not only did we have a 30-minute liquidity sweep that broke 30-minute structure, we had a 5-minute fair value gap that came into these lows, swept these 5-minute lows, tapped into a 5-minute fair value gap. It's barbecue chicken from there. You know what I'm saying? The more confluences you have, the more liquidity you touch, the stronger the move. Literally, guys. Literally. Now, what can also happen too is this 1-minute candle can just say, hey, you know what? Screw it. I'm going to break structure. Okay, that's fine. We have to be patient. We have to wait for the 5-minute candle to break structure again to the upside, because we don't want to be caught on the shit end of the markets. You know what I'm saying? We don't want to be caught up in it broke beneath these lows, it tapped into the fair value gap, it respected the fair value gap, but we're bearish. I'm going to take buys. Why would you take buys if we're bearish? That doesn't make any sense. So ultimately, guys, what I'm waiting for now is us to come down and sweep these 5-minute lows, tap into this 5-minute fair value gap. That's all I want. And then after that, we go to the 1-minute time frame and we wait for displacement. So guys, look, right? Let's say it sweep these lows, taps into the 5-minute fair value gap. All displacement is a break of structure, leaving fair value gaps. Like this is displacement right here. This is a perfect example of displacement. As you can see, this blue candle closed above these highs. It left fair value gaps. It broke structure on the 1-minute time frame, and it left a 1-minute fair value gap right here. Why is this? Oh, hold on 1 second. Ay. This? No, one shade darker. Yeah, so it left a 1-minute fair value gap. 1-minute fair value gap. Boom. This is a 1-minute fair value gap. Now, granted, the 1-minute fair value gap is going to get disrespected. Why? Because there's 5-minute liquidity resting beneath it, aka higher time frame liquidity resting beneath a fair value gap. So, going back to what I was saying, how the market chases liquidity, what is it doing now? Yes, this is the 1-minute fair value gap, but the market might disrespect that and say, no, I want to be greedy. I want to chase the 5-minute fair value gap, the 5-minute liquidity sweep. You get what I'm trying to say? So that's why, guys, you do have to be patient. And this is completely my fault for blowing my account, because I wasn't patient. I was trying to rush the process. I was trying to gamble. And, granted, I was still taking my regular setups, but I was greedy. I wasn't taking profits, not how I normally would. I was on the road. I was driving, so I wasn't really looking at the charts. I was just going in the trade and waiting for the hit to take profit. I wasn't putting my stop loss to break even or nothing, guys. But we'll get into all those tips and tricks once we get there. But for right now, guys, I just want you guys to realize what to look for in the markets. It's very, very, very crucial for you guys to understand that the markets chase liquidity. Now, one more thing I want to point out, guys, is if by 11:30, 11:15-ish, if we don't get any movement at all, I'm gonna cut it short for today, because I just wanted to hop on here and show you guys how I would look for a trade, what I'll be looking for, and give you guys a little bit of knowledge and education, you know? So, but yeah, like I said, there's definitely going to be a trading strategy video coming for you guys. I want to drop it Sunday when I have some free time, but I'll see if I can get it in earlier for you guys. But yeah, also another thing too, I want you guys to realize, right? So we're on the 5-minute time frame right now. You know, we broke structure, we caused displacement. If you guys ever wanted to know, or if you guys ever wanted to spot consolidation before the markets consolidate, all you have to realize or look for is, are we still creating fair value gaps? That's it. Like, look, we broke structure here, caused a fair value gap here, we caused another fair value gap here, but as you can see, there's no more fair value gaps being formed. So the moment you see price slowly like not forming any fair value gaps, that's how you know that it's an early sign of consolidation. It's up to you if you want to stay in, or if it's up to you if you want to get out. It's completely your choice. But yeah. So yeah. We have a mini fair value gap here, but there's no momentum. Yeah, guys, I'm still, regardless, I know this is going up, and this is okay. It's okay for you guys to miss trades and miss entries, because at the end of the day, you're trying to be the best trader that you can be. You're trying to be somebody that builds discipline and has resilience to the markets, you know? So yeah, guys, it's probably gonna break structure again to the upside off this 1-minute liquidity sweep, but I really do not care. I really do not care. Why? We want the trades to come to us. We don't want to chase the trades. You never want to chase the trades. And I learned that the hard way multiple times. multiple times. You know? What is next? Oh, look at this. We have more 5-minute lows right here. So the market is literally building liquidity right now. But there's a lot of liquidity up here too. I think this might be, yeah, 30-minute highs. These are 30-minute highs here. So we could potentially sweep this and come back down in alignment with our 4-hour trend. I'm gonna say that again. We could potentially miss our buying setup. Why? Because the market had better plans for us. What do I mean by that? We are bearish for today on the 4-hour time frame. We are not getting any reactions, or we're not getting any retracements into this 5-minute fair value gap. What is right here? 30-minute liquidity. We can potentially sweep these 30-minute highs to then go back down. You know what I'm saying? To align our bearish trend for today. You know? So for all you support and resistance traders out there, what you guys can use or think about liquidity as support and resistance. That's it. Like right here. This could be your floor or your support. These 30-minute lows. As you can see, it bounced off that floor. These can be your resistance, your 30-minute highs. It can potentially respect it and bounce back down, or it can just break above it. We have no control of what the market wants to do. But But ultimately, that's exactly how you want to think about it. Oh, my dog is going crazy. Give me 1 second, guys. Yeah, sorry about that. So we have 5 minute highs that we could potentially sweep, right? And come back down. We can use these 5 minute highs as our slingshot to come back down, sweep these 5 minute lows, tap into the 5 minute fair value gap, to then go back up to sweep the 30 minute lows, to then go down in the bearish direction. You know, you gotta use, that's how you gotta think about it sometimes. You gotta use these liquidity sweeps as, or potential liquidity sweeps as, maybe we're using this to bounce off here, bounce up there, to then bounce all the way back down in the higher time frame direction. That's it. That's it. And I really, really hope you guys are staying to this point of the video, because I really, I love teaching this shit, bro. Like, I love teaching this, and I want to make sure that you guys are all have that mindset and have that overview of the markets. And because once you see the markets based off liquidity sweeps, order blocks, you know, smart money, you'll never turn back. You'll never turn back, because it makes so much sense. It makes so much sense. And I respect everybody's um trading strategy, like whether it's support and resistance or not. Like, my only thing, because I came from support and resistance too. I went from support and resistance to supply and demand to smart money concepts, or ICT. And the reason why I realized support and resistance for me didn't work was because it was all subjective, you know? There was just like you drawing lines on the chart and hoping that price respects those lines. When in reality, the lines that you should have been drawn, that I should have been drawn, were the lines of lows and highs, which represents liquidity, which represents higher time frame liquidity, you know? But yeah, guys, so as you can see, the market is pretty much slowing down. As we head into the lunch hour, right now it's 10:55. This clock is way off. But yeah, the markets tend to slow down around this time, which is why I try to find a setup as early as the markets open at 9:30 as possible. But but yeah, it is what it is. So let me see. Let me take this off. I don't know why I have this here. Oh yeah, that's from the candles that I drew. Yep. And guys, unless you're scalping, stay away from the 1 minute time frame. Unless you're scalping or entering a trade, because there's too much noise, man. This 1 minute time frame changes trend every, like, almost every minute. It's so sporadic. Like, as you can see, this candle broke structure. We're bearish on the 1 minute time frame until this candle closes above these highs. You know, like, we're bearish right now. Even though we're going up on the 1 minute, we're bearish because this candle closed. Now, this candle is definitely going to close above these highs, but that just goes to show you, like, how. 1 second, guys. Hello? Can you give me like 10 minutes? I'm doing something. Can you just bring it by the door then? Okay, so just bring it by the door. I'll open the door now. But yeah, so now we're bullish. Um, 1 second. Are you coming in? So 5 minute. All right, so we swept the 5 minute highs right here. As you can see, we didn't close above them, but we tapped into them. As of yet, I have not seen us tap into the 5 minute fair value yet, which is crazy. But I don't know. Hopefully soon. Like I said, we don't control the market, so I'm trying to see what it wants to do. Fucking annoying. Tapped into it. Um, 5 minute lows here. Still waiting, but like by 11:15, I'm gonna be out because it doesn't look like there's any movement as of right now. No movement at all. Yeah, like it's consolidating, but just wanted you guys to see exactly like what I look for when it comes to the markets, you know? Hmm. Yeah, 30 minute, 15 minute. Hmm. It really isn't much, you know? It really isn't much. Now, hopefully, once we tap into these 30 minute highs, we can get like a reaction or we can get a better opportunity. Mm, 1 minute. It's a fair value gap right here. It's a fair value gap right here on the 1 minute time frame. That looks like it's getting respected, but definitely going to the 30-minute highs. Yep. Definitely going to the 30-minute highs. And that's exactly what I was talking about earlier. Um it's all liquidity, bro. Like once you see the market for what it is, it's all it's just chasing money. It's literally just chasing money. So uh yeah, going right to that 30-minute liquidity. Granny, can you close the door? Thank you. All right, perfect. Uh yeah, guys, probably no setup today. We got hourly highs here though. Probably no setup today. Why? Um, we didn't get any retracements. We did not get any retracements. None whatsoever. Well, it just tapped into the 30-minute liquidity. See? What'd I tell you? It used this liquidity sweep, the 30-minute lows, to tap into the 30-minute highs. Take this off. I'll delete this. But yeah. But I just wanted to come on here and tell you and show you guys. Oh, there's 4-hour highs here too. I wanted to come on here and I wanted to give you guys like a little bit of a an edge in the markets. My personal edge in the markets that I look forward to when I day trade. I don't think that we will. You know what? I'll wait till this 5-minute candle closes to see if we can tap into this 5-minute fair value gap to then tap into at least these 4-hour highs or these 1-hour highs or these 4-hour highs. If we don't get a fair value gap here, I'll just end it because I don't want to be on here all day. Video's getting kind of long too. But I really hope that you guys got some insight and some valuable information on this video. That's all that's all I want. And for the guys, for those of you who commented and you know showed love on my last video, really appreciate you. Really thank you for all that. Because it's only to the top from here, man. I want you guys to be successful traders, and I want us to be able to bounce ideas off each other. Like I want to build a community off of this, you know. Nothing but support and supporting each other and everything. Um, but yeah, so I'll wait and see. We got 3 minutes and 54 seconds. I'll wait and see how the candle. If we leave a fair value gap here, if this candle does not leave a fair value gap, I'm ending it because I want displacement on the 5-minute. I need displacement. We also have an order block here though that we could tap into. 5-minute order block. But hmm, do we close? If guys, if this candle wicks to this candle wick, I mean if this wick like wicks to here, doesn't leave a fair value gap, I'm gonna end it because I just see that this is about to start consolidating, and it's getting pretty late into the session anyway. Let me see the 1 minute time frame. Um, Jeez, man, my Wi-Fi. It looks like it's not gonna cause a fair value gap. Yep, did it? No, there is still there. Oh no, okay. Yeah, guys, I'm gonna end it for today. I really hope you guys had some value in this video. Please drop a comment, leave a like. If you have any questions in the comments, anything you need me to go over again, I definitely will. But like I said, I will make a strategy video. I will make an educational video for you guys to tell you guys exactly and show you guys what I look for in the markets. Hope you guys have an amazing day today. Um, See you guys at the top, man. Take care.